So this is Decommission Podcast episode 3. We're gonna put Mr. Isaac Cornejo on the hot seat, and we're gonna give him top 10 frequently asked questions that people should be asking of their lender. So let's start with number one. So
Say how the
somebody comes in with no experience ever buying a home, doesn't really know what a mortgage is. They just know that their realtor told them, go talk to my lender and they'll get you set up. So, first question they ask, what type of mortgage is best for me?
that's a really good question, Jorge. A lot of people are very different. So that would depend on the person. We all have different types of income. Some people are self-employed, 1099, just working as a W-2. Um, and it goes into like different kind of credits and savings. So well-rounded for a first-time buyer, I would say an FHA loan is it's the beginning mortgage, I would say, because it allows you to put down a minimum down payment of 3.5%. And with FHA, you have more room as far as your debt to income ratio. So in case you got a car, some credit card, that's okay. It's not gonna kill you. You can finance a little more with FHA. So it allows you for flexibility on your debt to income ratio, meaning that you can finance um, a little higher with FHA with a minimum down payment of 3.5%.
Okay, awesome. Well, that's great. All right. So, you kind of answered this one, but let's say that the same person comes to you, hasn't asked you any questions, they just met you. Their concern is really just about money. Like, how much money am I really going to need to buy a home? Because I know that I'm borrowing, but how much am I really going to need to buy a home? So, how much down payment am I going to need is the question. I've heard my uncle, my cousin said that you need 20%. How much just down payment, not closing costs, not anything else? How much down payment do I need?
Well, you can start as a minimum of 3.5%, up to 5% sometimes. And I know there's a lot of it's not a requirement, but a lot of like financial advisor, the Dave Ramsey program, they all require you to put 20% down. Now, 20% down, it might not be the case for everybody, but you can put down a minimum of 3.5%. So if you guys are watching me, let's just say we're talking about a property that's about maybe 275, just to have easy numbers. 275 minus your 3.5%, that's roughly $9,625. So that will be your down payment.
And that's just the down payment. That doesn't
Just
include
just the
any
down
other
payment.
types of, yeah.
Yes.
Mm.
On an FHA loan, 3.5%.
And then a follow-up question to that. So when do I have to give you that? Do I have to give it to you whenever we go under contract? When does that down payment usually get paid?
That down payment gets paid. Those those funds needs to be verified probably 5 days after you're on the contract, but you probably don't have to pay for all of your closing costs and down payment up until the day of closing. So you don't have to pay anything for speaking with me, the consultation time. There's no fee for any of that. But once you actually get to the closing table, you go to the title company. You have a lot of documents you're gonna have to sign, and you take pictures with your realtor there. That's when you get to your keys and you turn in a cashier's check for a total balance, which includes your down payment.
So you're not saying I have up until that time to save that money. You're saying a couple of days after the contract, we're under contract, that money is going to be verified and I have to have it.
Yeah, I mean, we can we can really time it. That way you can have that money maybe a week before closing. I mean, I
Hmm.
really don't recommend that, but we
Right.
can work with you. I would say have those funds before you even put an offer.
Gotcha. Okay.
It's the
Perfect.
best way. And that way you're really enjoying the process. You're not getting phone calls from your lender at 9 o'clock at night. This happened and that happened. It's a more enjoyable process.
Okay. So, kind of the same scenario. The person is super conscious about how much money they really need to bring to the table. I've heard about down payment assistance programs. So, is it assistance or are you going to pay my down payment? What is that and what does a down payment assistance actually entail? and how do I qualify for that?
Right. So how you really qualify for that is that the down payment assistance program has lenders that work with that program, that are approved by that program. So it's always better to go with the lender who's approved by those programs.
Mm,
And you qualify in, just an example, for Harris County, you have to meet an income limit, and you also have to have a credit score limit. So the
mm,
beginning credit score is 620, and I believe for Harris County the maximum you can make is 115,000,
okay.
three or more persons in the household.
Okay. Gotcha.
And really, it's just a very basic way to explain this, but they would help you with your down payment, give you, for example, 3% of your loan amount.
Mm,
And when they give you those funds, it's in a form of a second lien, mean,
oh.
meaning it's a second lien. It's another term for a second mortgage.
Mm-hmm.
So those funds will go into a second mortgage. They don't have an interest rate. You don't have to make monthly payments on it. It's just hidden for 3 years. After those 3 years, if you haven't refinanced the home, if you haven't sold the home, it's fully forgiven.
Okay, so you're saying it's gonna help me with up to 3% of the down payment.
It used to go up to 5%, but
Mhm.
how the market conditions are right now, they're
So
just
it
allowing
shifts with the
up to
market,
4%.
how much
Yeah,
it'll
it shifts
cover.
with the market.
It shifts with
Absolutely.
the market, number one. So we don't really know for sure. We have to check at the time of actually applying for it.
Hmm.
So then number two, I have to have it for at least 3 years. And if not, if I sell or refinance before that, it has to be paid back.
Exactly.
Okay. So, but then to qualify, you're saying that depending on who's giving the down payment assistance program, the qualifications can vary.
Yes.
Okay. So this is by county, it could be by state. So there's different programs.
Yeah, it's different programs, and they mainly go by counties.
Okay. Gotcha.
Yeah.
So by counties. Okay. Well, that's good. All right.
So that's
So,
why it's really important to know, when are you thinking about, I mean, are you thinking about being with a property longer than 3 years? Because
mm,
typically, average, people buy or sell every 7 to 8 years.
mm-hmm.
you know so if
Yep.
that's your plans, if you have that in plan, that hey, I'm buying my first home until my kids go to college or something,
Mm-hmm.
and they're probably in middle school, right?
Mm-hmm. Yeah.
So that gives you enough time to get the down payment assistance, be in it for a couple of years,
Yeah.
and not pay that back. It's fully forgiven. You don't have to pay a penny back.
Yeah.
And then later on you can refinance it, and when you sell the home, you can have more net when
Gotcha.
you sell the home.
Gotcha. Because it's in there as equity and you didn't have to pay it back. Okay. So here's another one. The question is more of someone who's more credit conscious, not so much money conscious, but okay. So my realtor sent me to you. I want to know, um, to do an application, are you doing a hard credit check? And if so, why?
I mean, that's a really good question. Um, Now, this is how I work. I know how valuable your credit is. So how I simply start with a pen and paper. I kind of ask you about what's your credit score and where have you checked your credit score, and then I go into like how much money do you make per hour, salary, your debts, and I kind of give you a verbal confirmation based on this information. With your credit score, with your income and debts, you can do about 350,000 with this interest rate, these terms. And after that, I would, if everything seemed right and it meets their expectations, and there's no surprises, we can go on to the next thing and pull the credit. And
Okay.
we do a hard inquiry because I work with a lot of credit specialists, and they told me that there's 11 versions of your credit score out there. So Credit Karma can be different, Experian.com can be different. A lot of
Yeah.
places you check might be different, but when
Yeah.
you do a mortgage inquiry, those are actual scores. Those are the scores we're going to use as, to qualify and give you the best interest rate.
Okay, so there are two follow-up questions to that. So my realtor told me that if I do multiple inquiries with different lenders to kind of shop the rate, that it's only going to show up, uh it's going to show up as multiple inquiries, but it's only going to affect me once. Is that true?
Um, so typically there's the rule that for the first 30 days you can do about three hard pulls,
Three. Okay.
and there's no huge impact.
Mm.
After the third one, on that 30th day,
Mm-hmm.
that's when you see a big drop,
Okay.
maybe 10 or 15 points.
Oh wow.
But when when the credit bureaus see that you got a mortgage inquiry, it's pretty standard that you're shopping around for mortgage.
Mm-hmm.
You're gonna get your credit pulled multiple times. So that's
Mm-hmm.
why that rule for not really a rule. It's more like a thumb rule
Mm-hmm.
for your three inquiries within 30 days. It's there.
So then how much usually should I expect my credit to drop, my credit score to drop when you do that hard inquiry?
Well, the first inquiry, you might not see any changes,
Mm-hmm.
but typically, if it's your second or third, probably around 3 or 5 points.
Okay. Okay, well that's not huge. Okay. So next question would be interest rate locks. So do you guys offer them at Supreme?
Um, the interest rate lock,
Mm-hmm.
yes, we do.
Okay.
Um,
So what my realtor told me that there's something called an interest rate lock. Can you tell me about that, and how much do I have to pay for that?
no, that's a really good question. So typically, when you do up to a 60-day lock,
Mm-hmm.
there's no cost. So you can lock in your interest rate for 60 days. So let's just say, and and we have to really time the market perfectly for
Mm-hmm.
this. So let's just say that rates drop in. This is a very unique a very unique scenario that I'm going to explain. But let's just say
Mm-hmm.
rates drop, and let's say next week the Feds are raising rates,
Mm-hmm.
right? So you can lock in your rate today for 60 days, maximum 60 days. You can do it for 30 days, 45 days, and 60 days at no cost. If you want to lock it in longer than that, let's just say to 90 days or 120 days or 240 days, you can do that. But you at that point, once it's past the 90 days, you would have to pay kind of like an earnest money to your mortgage company.
Mm,
That will
okay.
secure the rate for you. So it's not additional cost. It is a cost, but it's more like an earnest money, meaning that you get that those funds back at closing.
Oh,
And
okay.
that's to secure that interest rate up to 120 days and 240 days.
Okay. And then so when you say the 60 days, that means I have to be under contract by then, or I have to close by then?
So that's a good question. We do have a special program that you don't have to have a subject property yet.
Mm-hmm.
So if you're out there hustling and really viewing homes and submitting offers, and you have the confidence you're going to get under contract,
Mm-hmm.
we can lock in your rate with no subject property, meaning that you don't have a contract yet.
Yeah.
Um,
Okay. Perfect.
and you
So
can do that up to 60 days. Yeah, 60 days.
perfect.
Yeah.
So client wants to know, will I have to pay mortgage insurance?
Ooh, that's a good question. Um, Most likely your first loan or even your first mortgage or your second mortgage, you're gonna have mortgage insurance on it. Mortgage insurance, for the lack of better words, does not protect the client, does not protect the borrower. It protects the banks. In case you default and make payments, it's mortgage insurance. So it's a little silly because you're paying for the mortgage insurance, but it benefits the bank. It doesn't. I mean, it benefits. It say it benefits you, but it really benefits the bank in case it defaults or
Yeah.
something happens.
Yeah.
So, um, but to get rid of that, there's two ways to get rid of that. You can make a one-time fee and get that mortgage insurance out of there with conventional, or you can put 20% down and get rid of that mortgage insurance. That mortgage insurance.
Is that with conventional or FHA as well?
That's with conventional.
Okay. So is there mortgage insurance for FHA?
There is mortgage insurance for FHA, and it stays on there for the life of the loan.
Oh, okay. Interesting.
So whether you put 20% down or um or 30% down, it stays in that property until it's fully paid off.
Okay. Gotcha. So the next question, I heard my friend bought a house last week and they said that there was some lender fees on there, something called an origination charge. What is that?
The origination charge can be different forms of. I mean, it's one definition, origination charge. It could be for different reasons. It could be for just preparing your documents, or it could be for locking in your interest rate.
Mm-hmm.
Because you can don't want to get too deep into this, but you can get a lower rate and pay a little extra. That will you be paying extra is part of your origination points. Um,
Okay.
so um, yeah, that's your origination points. But sometimes if you have a good lender, it's just a standard fees, processing, underwriting fees, very standard fees, and then typically there's no origination charges.
Okay.
Yeah,
So
and that's really close. You should watch for, because um, it's a huge difference on origination fees and what you lock your interest rate on, your cost of your interest rate.
okay.
Because
So
sometimes you have both.
yeah.
Sometimes you're gonna have your fees for locking in your rate. Maybe that's 2,500. Sometimes you're gonna have a 1.5 origination point. So
Yeah.
really look at that closely. But typically it's one or the other. But I've seen with some in the past with different mortgage companies and builders, they have sometimes even both, um, fees for locking in your rate and origination cost.
Okay. So that was gonna be the next question. You mentioned builder. So how are they able to offer me 5.5%, but you can't do the same? What's the difference?
That's a good question. I believe that I spoke with a builder a little bit about that, and it seems like they kind of. I don't have an exact answer. I'll be honest, but
Yeah,
I
they buy down
believe
the rate because they're the seller too.
true. So
Yeah.
I'm not sure if they're doing a 2-1, or maybe they're just fully paying points and bringing that down.
Yeah. So that there's some of them that are doing a 2-1, but there's some that are offering 30-year fixed at 5.5.
Okay.
Um, but my experience is that yeah, that they're buying it down. It just depends. I don't know. I want to say the less expensive ones, like your Lennars of the world, are offering the 2-1. I have to double check. Um, but yeah, that's something that we want to let people know. Is like, yeah, you can go with a builder and their lender, but they're getting their money one way or another. So they're using the same money from the sale to buy it down, or they're offering you a 2-1, just like Isaac can offer you a 2-1, which we've
Mhm.
discussed a 2-1 previously. Okay, and let's see. Okay, so the last one. So I sat down with my realtor and they explained to me that the first couple of days is doing my due diligence on the property after I get under contract. Due
Mhm.
diligence on the property, inspections, all that. But that only takes about 3, 4, 5 days at the most. So why are they telling me that it's going to take up to 30 to 35 days to close? What is it
That's
that a lender's doing or what's going on in the background that it takes so long to close?
that's a really good question. And 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 this is something that I tell my clients. As long as your monthly payment is where it needs to be, and the funds from closing is where it needs to be, and you're happy with everything, I'll take care of everything else. Because behind the scenes, Behind the scenes, there's probably roughly around 12 to 15 people working on your loan.
Oh wow.
That's from start to finish. And don't want to get into details about that, but we process your loan and we do get it done pretty quickly. But most of your time is going to be spent on getting your appraiser out there.
So
Appraisals
what is
when
that?
appraisers when you pay the fee. Somebody goes out to the property, they re-inspect the property one more time, make sure it meets the conditions, and they give it a value. And the bank uses that value to lend you the money. And that's a very important process. That in this market, it roughly takes about 6 to 7 days, pretty quickly.
Yeah, in
But
a
that's
hot
most
market
of your
it was
time.
taking 14 days.
Yeah,
Hmm.
and plus, and even some in some cities like in Trinity County up north, and like the
Hmm.
country, it will take up to 30 days sometimes.
Oh
So
wow. Yeah, that
yeah,
makes sense to try to get
yeah.
somebody up there.
Yeah, and especially if the land is more bigger. Like I had this guy that was buying 5 acres and a home, really good deal. And thank God he had a survey because the survey turnaround was about 21 days. So it
Wow.
takes a long time to survey the property. They have to really measure the property out and make sure that it stands what it stands for. All the measurements of the property, and especially the bigger the lot size, it takes a little longer because it's one person, so they have
Hmm.
to go and measure everything out.
Oh dang.
Uh, but yeah, so getting your appraisal is the longest time, and after that, the bank would have some very minor conditions left, maybe like an updated pay stubs, bank statements. We need to source your earnest money, where it came from, because your earnest money you're gonna get it back, and just small details. And then after that, we have to balance out your final numbers. So
Okay.
it takes a little bit of time, but roughly around maybe, maybe 10 to 15 people working on your loan.
Okay.
Um, I'm not at one point, but throughout the loan is about 10 to 15 people. No.
Yeah, that makes sense. So just wanted to point out before we close. So one, it's a good point about the appraisal being probably being one of the things that takes the longest. Um, if you want to shorten your closing time, you can just always waive the appraisal. But there's some loan products that you have to have the appraisal. Like FHA, you have to have the appraisal. There's no waiving it. That's the first thing. The second thing is waiving the appraisal, which a lot of people were doing not too long ago when things were a little hotter. Um, then you're giving yourself another uh you're taking away another out from yourself. So if let's say the property it does not appraise, your bank uh or your lender, uh that's what they're basing that loan on, then you might just be walking into a property upside down already. So always, I would always highly suggest getting the appraisal, even if you have extra funds to make up the difference and the appraisal comes in a little lower, you can still stay in the negotiation. But waiving it it's not something I always recommend. It does take the longest. I've seen loans close in 9 days, but you waive inspections, you waive appraisals, so you're just walking into the house. And the most important thing to make somebody like Isaac's job easier is you have all your documents, you're you're responding to emails and calls and text messages promptly, because if he doesn't get all that information in a timely fashion, it just delays the process. And we have several deadlines to meet within our contracts, of like we have 3 days to make deposits, 7 days to do inspections. We have 21 days to make sure that he can get full approval for you. Now that can all be shortened and get a shorter closing deadline, which is very appealing to a seller. But you're gonna have to work really hard to get all your ducks in a row and make some, maybe give up some appraisals or inspections, which is not what I recommend, especially not in this market because it's not necessary. But if it's a home that you're completely in love with, then you might consider doing it. But To each their own. So I think that's all the questions that we had for Isaac today. Was there anything else you wanted to touch on before we sign off?
Um, speaking of speaking of appraisals, I've been in positions where people are selling their home and they're getting a new mortgage. That's a normal process. And I I ran into this situation maybe two times already. And I want to get your opinion on it. But sometimes the sellers will go out there and get their own appraisals and make sure the property is what it stands for. Is
Mhm.
that something that is necessary, or what can we?
I mean, you're doing double the work because you as a lender, you have to get your own like blind appraisal, right? Like somebody has to be sent out and get an appraisal done. So
Mhm.
yeah, a seller can get their own private appraisal, but it's just for their personal knowledge.
Exactly.
It doesn't do anything,
It
right?
doesn't do anything.
A-
Exactly.
and you can give it to a buyer, but the buyer's lender still needs to get
Oh,
their own
absolutely.
appraisal, right? So, and even if you're studying a property on top of getting an inspection, getting a private appraisal, it doesn't do anything because the only way I think the only way that it would actually help is in getting a second opinion. And it sometimes the appraisals we can always try to refute those, try to fight those, and try to get a second opinion, and maybe it goes higher or lower, whatever it is that you're trying to achieve. But most of the time they're all looking at the same data unless the initial appraiser missed something, which happens. And even
Mhm.
then, you don't need to hire an appraiser. You have a realtor that can pull the same comps because
Oh,
these
wow.
appraisals are less about the physical condition of the home, but more about how it compares to other homes. And a lot of times, they're what I've seen is drive-by appraisals, which they're supposed to go out into the neighborhood, but they don't. They're just doing it from their computer, which it's something that it's completely legal to do. So why not? So they're just looking at the same comparables that your realtor is looking at or your real estate agent is looking at. So would I would think that's the only situation where you would get your own appraisal unless you're like selling your home on your own. You're selling your home on your own, then yeah, you get an appraisal and see what banks, your potential buyers' banks might appraise your property at, and that makes sense. That makes a world of sense. But if you're gonna go through the entire rigmarole of being represented and somebody that can provide you comps, uh, spending the extra $500-600 doesn't make sense unless you're like gonna ask for like a reduced commission, which 1% less or 1% more commission or $500 to spend. Okay, maybe I can see it. That way you don't have to rely on this person for comps. You can just hire an appraiser and say and use that appraisal report and to tell your discounted real estate agent, this is how much I want to list for because I know that it'll appraise. The problem that you run into that is accounting for uh let's say right now in this market houses are taking 30 to 40 days. If your realtor, if your appraiser, your private appraiser is not accounting for what's pending and what's closing in the next couple of weeks, then your realtor can in real time give you updates on that. And I think that that's worth having somebody sell your home for you. But to each their own. A lot of people sell on their own, usually sell 20% less than what they would on the market, even with paying commission. So I think that those would be the only scenarios where it would make sense to have private appraisal done.
Yeah, true. Yeah, yeah, very true. Yeah.
Okay. All right, man. Well, I appreciate you hopping on. We'll reconvene next week and hope to have some more information for everyone. This is the Decommission Podcast, episode 3.